Hello guys, good afternoon. In this video I will try just to highlight the stock market. We say that the stock market is a mess and it is illogical, and is a mess. How do you see that? If you go and you see a chart or you see your broker and you have any stock and try to see the bid and the ask. People are buying, selling, buying, selling, buying, selling. You don't know who is buying, you don't know who is selling. You have big lots, we have small lots, you have even weird lots. For example, someone is buying like 3 shares. Okay? 3 shares. Anything that below 100 shares lot is weird, and most of these people who are like buying less than 100, just in general, most of them, they are beginners. Okay, so a stock is like $40. So this guy has not $4,000 to buy 100 shares. So he has only 2,000, so he buy 50 shares. Okay, now when you find big lots, you find someone who is entering with millions of dollars. Okay, buying 300 or 100,000 shares or 50,000 shares, depending on the stock. If the stock is fluid, for example, like Facebook, like Bank of America, Cisco, those stocks that are that we have too much traders and too much money, so you will see that the stock is liquid. Okay, the volume is so high that anyone can enter and anyone can exit, buying or selling, and it doesn't show that much. But if it is a penny stock, okay, 50 cents for example a share, and the whole volume, for example, is 50,000 or 100,000 volume. If someone has millions of dollars, he cannot enter into this trade, because if he enters into the trade, the stock from 50 cents, it goes to $10, $20, $50 in one day. So that's why the big traders and so they don't like these illiquid stocks that no one goes there. Okay, in order to make money, you should go where the feast is. The feast, it means the big cake where you can have some money from the stock. Okay, you go to a penny stock with 50,000 shares, and a share is 1 cent or 2 cents or 5 cents. All the money is $10,000 or $20,000, and we have hundreds of beginners and 1 or 2 professional. Now the professional, he knows everything about the stock. He knows everything. The people, they put their money and he short and he take their money. Okay, this is what happened in penny stocks. Now when we say illogical, is because fundamentals are not a sure thing to invest or to trade. I will tell you why. That's why we have what we call technical analysis, is a replacement of fundamentals. Although fundamentals is used by the big guys because they put too much money and they want to make sure at least the company is making money and it has progress, a lot of stores, a lot of things, a lot of a good management, the other stuff. But for those people who have too much money, people having like a mutual fund, he has billions of dollars to spend on a stock or 2 or 3, so he should choose the best. And when he buys this kind of stock, the stock goes up by force of buying, not because the company is good. Okay, it's just because he buys too much from shares. He buys almost all the shares on the market. That's why the stock price advances up. And when he sells, there will be a catastrophe in the stock, because it was 50, it becomes 30 in few days, because this guy is selling, this mutual fund is selling all his shares in this stock, because each year the mutual fund, they should change the stocks that are losers. Okay, a mutual fund manager, he doesn't know more than you. You are beginner, you know better than him, because no one knows which stock will go up, will go or will go down, because it's not only one person decide, it's almost all the people who decide. Okay, all the people who decide in one stock, because they trade. If you like the stock and the stock is going up, okay, I go and buy. But if I see that all the people are selling, I sell. I will not stay in a loser. Okay, this is what's very important thing. That's why it says it's illogical. You find sometimes big companies in the world, very successful, good management, a lot of earnings, a lot of development, but the stock stagnates. The stock is 60 or 70 or 30 or wherever, and you see 10 years it doesn't move. It moves 5 points, $5 or 10, and it goes back to what it was. For 10 years, 20 years, there is nothing. But the company is doing too much earnings and too much money is there. But the stock is not doing nothing. That's why for you, if you are, for example, if you are investing and you like a stock or many stocks and you want to invest in them, so wait until you have a signal when the stock price is moving upward. That time you buy. If the stock stagnates always, going up 10 points, going back 10 points after 6 months, then 10 points up, this is trending in a range, and it could take 10 years, 20 years, and it's the same. Until someone big, very, very big, like mutual fund or a hedge fund, he goes and he buys this kind of company, and then you will see all the people, they're coming to this company in order to, because they see that this company is advancing. Day traders are the very good people who knows, because when they see a stock that's moving up, they will buy other day too much. That's why you should see spikes, very long spikes, because they buy and they sell in the same day. Now other traders that are, for example, swing traders and position trader, when they see this kind of thing, they just jump in the first day, second day, and they follow and they stay. Now the day traders, they don't stay. They have their profit in the day, and they at 4 o'clock they go home. Okay. They are home, they are working from 9:30 to 4 o'clock. This is their job. They make their money. After 4, they go to have a shower, and then they have fun at night. This is what the day traders do. Now, this is the thing. They don't want to risk more at night, because at night, some big fish, like hedge funds, they come at night and they see news or something, and they come to a stock and they hit it. They short sell all the stock, and you are in a position, you have, the stock is $50 and you are okay, and you have stayed 1 month or 2 or 3, and you are making too much money, like 40%, 50%, 60% or 80% or 100%, and then this guy, this hedge fund, comes at night and he short all the stock, and from 80, in the next morning you find it 70 or find 60, and a lot of people, they lose a lot of money. Okay, so when we say the stock market is illogical, that's why people, they don't understand. There are thousands of books that have been written in the 20th century about trading, about investing, but no one succeeds. Now why no one succeeds? Okay, the cause or the reason for that is that the market is illogical. People, you see a stock that it is 1 cent or 2 cents or $1. After 1 month it goes $10, $20, $30, and you see the company fundamentals. You find that this company is making nothing. It has no earnings or very little earnings. The management is bad. The company is very, very small. But why this company is, the stock price is going up too much? What's the reason for that? Okay? The reason is that someone is buying, that's it. It has nothing to do with the company. That's why I made before a video. I say, what's the difference between a company and its stock? There is no real, there is a link between the price, between the company and its stock. But it is the traders who decide for the stock and the company. It is not the company that decide. Not because the company is very famous and then the stock is very high. And the company which is not famous, which has no earnings, it will be a trading low. It's not in the stock market. It is not. It is the big guys like mutual funds. When they buy any stock, it will go up by the force of buying. This is supply and demand. It has nothing to do with the company management, company earnings, and people who are still following this stuff, they will suffer a lot. Because when you go online and you go to analysts and they begin boasting their fundamentals knowledge, the PE is 40, the earnings I don't know, they bring indicators, they try to have all the fundamental stuff, and they begin to show you that this company is the best. And then when you buy it, 1 month, 2 months, some people, hedge fund short it, and then you lose all your money, or half of it, or 10%, 20%. Because when you follow other people, those people that are online, they are paid to tell you what to buy, what to sell. And I have made a video about Jim Cramer, or Kramer, I say his name. So, and some of my subscribers, they told me they have get his advice once or twice and they got lost and they lose money because this guy, he's not the market and anyone else in the market. No one is the market by himself. It means he tells you buy this or sell this. You know better than anyone else. Maybe you buy a stock and no one knows. It's $5, $7, and this stock in 1 year it goes to $100. Okay? I showed you before PCYC, which is a drug company. It's called PCYC. From $6 it goes to $135. Okay? Last year I got 35% of this, but when there is like when some people short it, I get out and I forgot about it. Now after some months, it goes so wild. But I get 35% of it in 3 days or 4 days only, so I don't stay the whole year. But it's a good experience that some stocks, because I'm not an investor, I don't stay that much, because when I see the short sellers coming and they begin to hit the stock, I just get out. Okay? I am too small to swim with sharks. There are big sharks. They have big mouth, thousands of teeth. If they grab you, they swallow you alive. Okay, so it's like a hyena in the wild Africa. Those hyena, they have the strongest jaws and the stronger teeth in the whole animal arena. So when they catch an animal, they eat it alive. Okay, they don't kill it; they eat it alive. And the animal is screaming, and they eat. This is the hedge funds. This is the big traders, what they are doing in the market. So they eat you alive if you stay in a stock that it is losing money. Put your stop loss. Whenever the stock is going down, it hits your stop loss, get out, and then wait. If the stock price goes more and more up, buy it again. But just wait. Don't stay and you say, like fundamentals say, one day the stock will go up. Okay? So some stocks, they will never go back. They will never go up again. Okay? I have made a video. It's called Funny Stocks, PCYC, and another stock, I forgot the name. When a stock was 450,000 a share, now it is trading with $10. If if you have 450,000 and you buy only one share, now you have $10 from this $450,000. Okay, that's why I say the market is illogical and it is a mess. When you go to 1 minute or 2 minutes chart, you see people buying, selling, buying, selling, buying, selling, buying, selling. Where is this fundamental that the company management earnings? Where is it here? The people who are doing futures, they are doing day trading. They don't care about this company. What is it? They know only the ticker. It's XYZ. That's it. They don't care about it. They get the money and they dump it. That's it. Okay. So I hope you understand this lesson. And if you have a comment, just comment. Thank you very much for watching and good night.